I'm Greg Hunter. Welcome to USAWatchdog.com. Our next guest, prolific writer, lawyer. I don't know, she's been published about 10 or 12 books. She's an expert in public banking. I am talking about Ellen Brown, her website, ellenbrown.com. I always just put in Web of Debt. That's her blog, Web of Debt. Ellen Brown, thank you for joining us today on USAWatchdog.com.
Thanks, Greg. Always good to talk to you.
Well, I know you're. I want to talk about this towards the end of the thing. I know you ran for, I think, treasurer in the Green Party in California. Is that right?
Yeah, that's
Okay,
right.
I want to talk to you about that, about the Green Party and Jill Stein and Bernie Sanders voters at the end. But what I want you on for is, I'm reading in the newspaper that, oh, hey, the fear levels have gone way down to, back to levels of 1993. Never mind the people warning that something's powerful wrong, like Jeffrey Gundlach, who, invest $100 billion, or Bill Gross, the bond king, is now at Janus Funds. Never mind all that. Everything's fine. Everything's groovy. But you wrote this piece about the Brexit and about the 500 trillion in derivatives, and some people say it's triple that. But it was what we face is something pretty daunting and something we've never faced before. Am I right about that?
Yes. Well, the derivatives pyramid is poised to collapse. That's why they never let sovereign governments go bankrupt. For example, in Europe, we just had Brexit, where the fear was that this would trigger a collapse of the whole economy, as everybody's been predicting for a long time. But of course, it didn't. Things turned right around, like you said. All the MSM are saying that everything's just fine, which it is if you're an investor in the stock market, probably because central banks are buying stock now. The central banks always jump in to prop up the markets to make everything look good. The Federal Reserve is not allowed to buy stock, but there is some suspicion that they have swap deals with Switzerland, for example. The Swiss central bank is buying up a lot of U.S. stock. But the concern is this $500 trillion of derivatives just on sovereign debt. There's $100 trillion in sovereign debt globally, which is a huge bill. And then you have all these derivatives betting against it, or credit default swaps that would pay off in the event of a default. So they can't let any of these governments go bankrupt. They can't write down the debt. They can't write off the debt as they should. These are impossible debts in Europe, particularly Southern Europe, like in Greece, impossible debts to pay. But the central banks and for example, the Troika in the EU will not let any of these governments go bankrupt, because it would trigger, the fear is it would trigger this cascade of defaults among the derivatives players, which would bring everything down. I'm just been researching heavily on what the real problem here is. It's the safe harbor status that's granted to derivatives, repos, and asset-backed securities. So all those things can jump in ahead of a bankruptcy and grab their collateral. As soon as things start to look shaky, they can grab the collateral. So they're basically outside the bankruptcy system. So there is no such thing as bankruptcy for big banks, for example. You don't have bankruptcy protection. We saw that in Lehman Brothers, where JP Morgan basically triggered the whole collapse by jumping in and grabbing their collateral. I think it was 17 billion or something that they grabbed right off the top. And I guess Citigroup also or another big bank grabbed a bunch of collateral. And after that, Lehman did not have enough money to pay off creditors, and they did go bankrupt. And then you did have this cascade of defaults. So they should get rid of that safe harbor status, which would pretty much eliminate derivatives. But then it's how you unwind all those derivatives is another problem. But I saw that Elizabeth Warren has brought another bill. She brought this bill before, and it didn't pass. But in June, she introduced a bill to get rid of safe harbor. And I guess the regulators have a proposal on for a 2-day stay for derivatives, which is it's out for comment at the moment. I don't know if that'll happen. But the problem with just a 2-day stay is then the derivatives players will jump in even earlier. As soon as they see something looking shaky, they'll require yet more collateral, which will turn a bank that was close to bankruptcy will make it bankrupt if all the players start grabbing their collateral.
Well,
So anyway,
I want to bring up one thing real quick, just so you, a case in point about not letting anybody go under. I want to just backtrack just briefly, and you bring up in your article, Greece is 2% of the EU, but yet they will not let them go under, and it's because something as small as Greece going under could take the whole system down.
yeah, and that's why they have to force austerity on the people that the Greek people must pay no matter what, because of that fear that they have all these derivatives, which are basically bets. So there's this huge casino on whether any of these countries will default. And if they do default, the insurers, the supposed insurers, are these big banks. They just sit back and collect these premiums month after month or year after year. But it's like a big insurance. Well, it's like AIG. AIG was the insurer for these derivatives, for a lot of derivatives, and that's why they went bankrupt. If there is, it's not like a fire. You insure a house against a fire. Like there's one house in a whole county that might burn up. But when you have a collapse, like a default of sovereign debt or the subprime market, mortgage market that collapsed, you've got fires everywhere. So the insurance company obviously doesn't have the money to pay. And AIG was a real insurance company, but in the whole derivatives casino, you don't even have to prove that you've got the money to pay up. I mean, it's all, a lot of it is over the counter, which means it's not regulated at all. Nobody even knows what these deals are. They're private deals. So it seems to me, but they have government protection in the form of this safe harbor status. That's why derivatives exploded into this, like you say, some people say 1.5 quadrillion. It's not clear how big the derivative market is, but it exploded because derivatives, repos, and securitized assets have super priority in bankruptcy, which means they're like bankruptcy remote or bankruptcy proof. They don't have to worry about bankruptcy. They get their money no matter what. So everybody, of course, wants to be a derivative instead of a regular contract. In other words, rather than having regular insurance, you want derivative insurance because you're bankruptcy remote. You can't go down in bankruptcy.
And this way, they can take over countries. They essentially took over Greece. Essentially, the bankers took over Greece.
Right. And the reason they even had a populist referendum that's where the people said, no, we do not want to pay these debts. And the government nevertheless was forced into paying, and the reason, or to agreeing to the austerity measures in an attempt to pay. Of course, they don't have the money and they can't really pay, but what they are doing is selling off their public assets and all those things that people don't want. But the reason they had to agree to that was that the central bank turned off their liquidity. And all banks require, it's the nature of the banking system that all banks are effectively bankrupt. They all are lending out money that they purport to still have in the bank. In other words, you've got your depositors that can come for their money at any time, and yet supposedly all that money was lent out in 30-year mortgages. So how do they do that? If they don't have the money, they can borrow it from another bank, which does have the money, because that basically most of the money stays in the system. Most people don't pull it out in cash. And if the other banks don't have it either, then they borrow from the central bank. Well, in Greece, because the banks were shaky in the first place, the depositors did pull their money out. So the banks don't have enough reserves. So they should be able to go to the central bank for a backup. Our central bank, the Federal Reserve, put up 16 trillion or more, some people say as much as 29 trillion, in very low interest loans, overnight loans, to backstop the banks when they had the same problem. But the ECB refused, unless they just allowed this emergency funding, which was just kind of a trickle of funding, unless the Greek government agreed to all these austerity measures and agreed to effectively basically pay off the debt. And that was all because otherwise the derivatives player would grab the collateral, and the fear is the entire international banking system would go down.
And fast forward to today. So the fear is still the international banking system could go down, and now we even have a bigger pile of a horse who we call derivatives. And you're saying that you're saying that it's very risky that we could have a international collapse, and the derivative players are going to cause it.
True, but the way things are going, that probably is not going to happen. That the bankers have won. From their point of view, too big to fail is institutionalized. They are too big to fail, and we are not going to let them fail no matter what. So we're all going to be in the situation of Greece, of the Greek people, rather than let these banks go down. So what we have to do, it seems to me, is change the rules. So what I'm working on right now is a another book that would basically suggest how the rules could be changed in a way that would unwind the whole thing safely. It seems to me you can't just say, all right, safe harbor is over, because that would be too drastic. But what you could do is say, we're going to terminate safe harbor in 2 years. So you guys figure it out, unwind yourselves. And you can imagine that the derivatives players are going to no longer make contracts of that sort, or they're going to figure out a way to terminate them in the next 2 years, and they'll get out of it themselves.
But we can still, I mean, we can still have a crash. All these big players are warning, sell everything, buy gold. Jeffrey Gundlach a couple of weeks ago, sell everything, buy gold. I mean, that just because you don't think it could happen, it's a lot of other people, big money investors, think it can happen, and they're warning people.
Right. Well, I think the big banks won't go down under. They're protected by, there's the bail-ins, which we haven't yet seen in the U.S., but we've seen them in Europe. They're starting in Italy. They've done that. They did them starting last year. There were 4 small banks that got bailed in. They didn't actually literally take the depositors' money. The depositors' bail-ins weren't supposed to start till January of this year. But what they did do was take these. They were basically safety. They were basically deposit accounts where you would get some interest, and they were called bondholders. So they took the bondholders' money, but they were really just ordinary depositors that just thought they were making a little interest. And there was one man who committed suicide because he lost his whole 100,000 euros, and he pinned a little sign to his chest and blamed it on his bank, and so that made the news. And the effect of the bail-ins in Italy was that rather than stabilizing the banks, it destabilized the banks, because then people got nervous and the depositors were pulling their money out. But it seems to me that the way things are going now, the banks will be kept in place by governments or by this fear of the collapse of the derivative scheme. And who will be hurt will be the little people. So we'll see a crash, but it will be a crash on us. I mean, we'll lose our deposits, or we'll have to do another bail-in. But the big banks, under the current law, are pretty much safe from collapse.
That is. Go ahead.
Some laws.
That is sad. I'm sorry I cut you off. What was the last thing you said?
Yeah.
What was the last thing you said? We'll have a collapse on us, and unfortunately they'll stay in.
Change them under existing laws. The laws need to be changed. So, I always write, I tend to be the eternal optimist, but I always write how we could get out of this, or what the solution is, or what the better system is, or where our system has gone wrong. It's a faulty system. It's not. You could throw all the crooks in jail and you would still have the same problem. It's still a faulty system. You need to change the system. It's all based on this inherent fraud that banks have money that they don't really have. And that's where our credit comes from. And we need the credit. If you didn't have that credit, you wouldn't. That's the credit that makes the engines of productivity go around. But there's another way to do it, and that's what I write about.
Hold on. I want to get to that. Another way to do it. I know you want to turn the bond debt into cash, but hold on a minute. One last thing. I don't want to gloss over the bail-ins. You say a crash on us, and that means bail-ins are going to come here to America. A lot of people say, "Oh, they'll never just take my money," and you're saying, "Oh yeah, they will. They did it overseas. They're going to do it here." Is that right?
Yeah, if a big bank were to go bankrupt and or were to be put into resolution proceedings, which they don't let them go bankrupt anymore. You know, the deal is the big bank has to be saved, and it's the depositors that will take the hit. Under Dodd-Frank, and the FDIC would protect small depositors up to $250,000. But first of all, that means the big depositors are at risk, which is like what happened in Cyprus, where it was the businesses. They're the big depositors, but they're the local businesses. So they keep a lot of cash around. In Europe, it's over 100,000 euros is the deposit limit. So the ones with more than 100,000 euros in the bank lost 50% of their money. So those businesses went bankrupt or had to lay people off. I mean,
They had payrolls. They had, you can't have 250,000. You got 50 people working for you. You need a lot more than $250,000 in the bank to make your payroll, unless.
but yeah. So it was devastating to the economy, but theoretically they saved the banks, and that's the way it's going now in other European countries. I mean, so our hope is really these little revolutionary movements that we see going on. Brexit was a start. Brexit was very bold of those British people to break away because they do have a lot of dealings with Europe. I mean, they'll be going through some pain in order to pull through that, but it was like the American Revolution. They recognized that this is not working for us. So that could trigger other withdrawals from the EU. Italy is one that could go there. Well, we see movements in lots of places like France, populist movements. They tend to be right-wing populist movements. And then, of course, in the U.S., we have the Bernie Sanders and Trump movements that were unpredicted. You know, the people are unhappy, and that's why Bernie Sanders and Donald Trump managed to generate so much interest.
And I want to come back to the Green Party, Jill Stein. And if you read the newspapers and you watch CNN or CNBC or Fox, they all think that, hey, well, because Bernie Sanders stood up on the convention stage and said, vote for Hillary Clinton, we have to get her elected, and then turned right around and quit being a Democrat. And Jill Wasserman Schultz got hired by Hillary Clinton. The person that rigged it got hired by the person she rigged it for. Wow, that no bad juju there. So most of the people that I mean, anecdotally, I talk to young people and say, who was your guy, Bernie? How'd you like the way they treated him? I'm pissed. Who are you voting for? I'm not voting for Hillary. Tell me about. Isn't Jill Stein in the Green Party, which you're part of, isn't she and Gary Johnson and even Donald Trump and none of the above, aren't they all going to get more votes than Hillary Clinton? Aren't the Democrats going to take a big hit for this? For committing fraud against half their voters?
You would certainly think so. And it depends on who you read. The mainstream media say that the polls are all in favor of Hillary now, but there are some alternative media polls that say that Trump is ahead. And meanwhile, Jill Stein's numbers have gone way, way up. So people are flocking to the Green Party. There's no chance. I mean, I shouldn't say that, but it's very unlikely that a third party would win. But our goal at the moment is to get into the debates. Jill Stein was actually thrown in jail for just attempting to attend the debates the last time around. So she actually got a seat at the table. That would be remarkable. Just a chance to express some of these ideas, to tell people that there are other ways that we can do this. We don't have to put up with this system.
She was probably the biggest benefactor. I think all three of them picked up people. I saw one poll where people, went over to Trump. I saw another poll people went to Gary Johnson. And Jill Stein, I think she got a big vault up. This is all people that would have voted for Hillary Clinton would have voted Democrat. I mean, we're talking about half of the Democrat electorate. The Democrats are, everybody that I talked to who's young who was a Bernie fan, I haven't met one of them that said, oh yeah, that was fine. They defrauded me. They punked me for a year. They had me on this idea that Bernie Sanders could win, and no, he was never going to win. That was just a game. Aren't these people going to remember this come election time in California? You're in California. I mean, doesn't this put California in play for Donald Trump? I mean, if a lot of people don't vote for Hillary and they vote for the other candidates, couldn't he win California?
uh, this is California. We always go Democrats. So, I mean, that's one reason you're safe voting for a third party here is because your vote probably is not going to count. But so I can't really say, but I agree that a lot of people are very unhappy with the Democrats and with Hillary, and that Debbie Wasserman Schultz. If I could just put in a plug for Tim Canova is running against her in Florida, against Debbie Wasserman Schultz, and he is brilliant. And if he got into Congress, he could really bring some very effective proposals. He's a law professor who has done a lot of research on the Federal Reserve and what's really going on with the banking system. So there are candidates out there, and he's one that I would definitely plug. I'm not from Florida, but we've had him speak at our conferences, and I'm very impressed with his ideas.
But people, it's not just my imagination. The MSM is ignoring these outraged Bernie voters. I mean, you're in the Bernie Central. There are a lot of people. I had people write me and said, "We feel Bernie won California, and they stole it from him." That's what people think. And
Yeah.
I don't know if it's true or not, but that's what people think. They think that they pulled something in California and they stole California from Bernie Sanders. I mean, isn't that sad? I mean, you have all these super delegates, and you still gotta you still gotta do what you were doing. You gotta commit fraud. I mean, it just shows how she's incredibly weak, or Bernie Sanders is incredibly strong. But it's not my imagination. The question to you: Bernie Sanders voters are outraged around you that you see in California.
Agreed. Yeah, and a lot are flocking to Jill Stein, and of course that's the party I'm the most familiar with because I'm on the Green Party shadow cabinet as their Treasury Secretary. So,
Okay, and one last thing, as far as that we could have the bail in, what was your way? If the crash could be on us, could we see a crash with this IMF thing and the yuan entering the basket currency? Jim Rickards is out saying that the end of the petrodollar is September 4th. That's one report that he put out on his intelligence report. What do you think about the dollar taking a hit if the yuan gets in and the dollar is no longer the world reserve currency, or at least the petrodollar anymore? What do you think?
I mean, central banks are so in control, and the Federal Reserve is pretty much calls the shots behind the scenes. It looks like, and I don't see. We're not like Greece, where our interest rate could shoot up to 30% because we don't borrow abroad. We don't borrow from other countries, or we don't need to. Our Federal Reserve can buy up the entire debt if they want to and keep the interest rate at zero. So,
Which is what they're doing.
yeah, so they can prop the dollar up indefinitely. It seems to me it's all up to the central bank and what the central banks are up to. And if we want to regain control, we need to get control of the central banks, I think.
But your picture of the crash would be that the crash would be on the little people. The banks would stay standing, and the little people would take a hit. That's your view on any crash we have is going to be just for us little people. Is that right?
Well, that's the fear. The TPP will get the Trans-Pacific Partnership will get passed. The TTIP, the TISA, the Trade and Services Agreement. So it looks like I have read that the goal here is one big corporate. The corporations will take over the world. The corporations will be the government. They'll control the governments, and it'll be ultimately one big corporation that calls the shots. And how did they get that power? They got that power initially by taking the power to create money away from governments. So the way we can get that power back is to take back the power to create money. Right now, all of our money is created by banks when they make loans. All of our circulating money supply, not counting dollars and coins, which are dollar bills and coins, which are a very small part of the money supply. So all of the rest is created by banks make loans of money that they don't really have, and then they cover those loans by borrowing from each other. So it's this great big shell game of money. Well, we, the people, could be doing that and should be doing that ourselves through, I would say, a publicly owned central bank and publicly owned state-owned banks. And so that's my whole push, that if we owned the banks, we could take back the power to create money, and we could fund infrastructure and all those things that the people need. It would not be inflationary, and I've written lots on that, so that's what I want to write, a whole book on that, because if you just write an article, then you can't be that convincing, and you're only allowed like 1,500 words. So in a book, you can point to your book and say it's all in my book. I've gone into it in detail.
I think you have 10 or 12 books. How many do you
Well,
have? 12, I'll say. I knew. It's 12. Sorry. I didn't mean to undersell you being a prolific writer, author, book author. We love having you on. Love your brain. Thank you so much, Ellen Brown. Of course, her website is ellenbrown.com. If you put in Web of Debt, that's her blog. You'll get that too. Very popular on the internet. Ellen Brown, thank you so much for joining us today on USAWatchdog.com.
thank you, Greg.